Welcome back. We take a closer look at the day's market action now with Victor Seanie from Benguela Global Fund Managers. Thank you so much for your time, Victor. Now, the friction between U.S. President Donald Trump and Fed Chair Jerome Powell continues. Are the markets looking at Trump's utterances against Powell with any concern at all?
Yeah, I think because the U.S. is the leading economy, a lot of tension and back and forth and the uncertainty that's created by Donald Trump's utterances is creating a lot of nervousness in markets and a lot of volatility. So that is negative for the rest of the world because it just puts a lot of decisions on hold, such as investment decisions, hiring decisions. We can see that even though we saw a nice number out of jobless claims, the number that is not reported at a headline level is that the number of people that filed jobless claims in prior weeks continue to be jobless, and companies have put hiring on hold. So a lot of uncertainty, and it's just negative for the U.S. economy as a whole. There are many examples of countries where government interfered with the central banks, and in all those cases, those economies didn't fare well. However, I think Powell's job is secure, at least until the end of his term, which ends in May next year. And many pundits and lawyers say that Donald Trump wouldn't be able to remove him. We've seen that Donald Trump, he backtracked. He does have a burning desire to fire Powell, but as you said, since he's not going to do it, it's unlikely.
All right. Well, yeah, it's quite an interesting thing that you note there, that companies are basically deferring their decisions, particularly, financial, when it comes to hiring and all, because they're unsure of what is happening in the economy. But actually looking at a particular data point, U.S. retail sales, that actually surprised to the upside. Talk to me about what that signals, and maybe you can link it to what we saw with Pepsi.
Yeah, retail sales in the U.S., they surprised month on month. They increased by 0.6%, and the expectation was for only a 0.1% increase. That is put down largely to price increases passed through by retailers. And when you drill down into the data, you'll see that the categories that are most affected by tariffs are the categories where the retail sales increases were the greatest. So the inflation figures for those categories as well indicate that it's largely because of retailers beginning to increase goods prices. And that's what they'd want to do. They'd want to gradually increase prices as opposed to be doing it in a couple of months' time in one fell swoop when they have certainty as to what their input costs and their tariff costs may be.
Yeah.
Linking it to Pepsi, there's no direct link because this was largely driven by manufactured product outside of the U.S., whereas food manufacturers like Pepsi often manufacture in country, so they'd be less subject to tariffs.
Okay. All right. And it's quite interesting also because I saw, as much as they beat on the earnings, the volumes were down. Is that something to be concerned about, or something that could pose a risk, or in terms of what it says also about the consumers and maybe how the consumers are absorbing prices at the moment?
Yeah, so it does suggest that consumers are very pressed, and so they're cutting down on discretionary spend on snacking and beverages and so on. But also, there is part of it is the impact of the GLP drugs, because we see that because GLP drugs have taken off mostly in the U.S., it's in the U.S. where Pepsi's volumes were the worst, were negative. You also see a bit of a trend towards healthy eating and drinking, because while the rest of their drinks portfolio volumes were lower, it was in a core Pepsi brand where drinks volumes were up about 1%. But then in their Pepsi Zero Sugar, they actually they saw an increase, a double-digit increase in sales volume in the U.S. So the CEO actually said in an interview that a lot of people are requiring more hydration when they are on GLP-1 drugs. So you can and they're probably a bit more health conscious and hence going for the zero sugar Pepsi. In their foods, in the snack foods business, you do see possibly GLP having an impact there. So people are eating in their Frito-Lay business. You see people are eating less Doritos, my favorite. People are eating less Lay's, and then also in their Quaker Oats business in the U.S., volumes again there were down, and that's the business that manufactures cereals, breakfast cereals, as well as energy bars, granola bars, and such.
Fascinating dynamics playing out there, and I think Lay's then needs to bump up its marketing campaign. Well, let's take a look at chip maker TSMC. Came out with a record profit in the second quarter. I mean, this tone that we saw, and particularly how investors reacted to TSMC's results, the opposite of what we saw with ASML. So just talk to us about what drove this performance for TSMC.
Okay, I'll touch on the point of difference between it and ASMLs in terms of the market reaction. That's because, so they just reported their second quarter, and the guidance they gave for their third quarter was also quite bullish. They mentioned that they expect their revenue to grow by 38% in the third quarter. That's an acceleration of about 30% that they saw in the second quarter. But as we know, the key driver is that AI mega trend. And they saw that the chips that they manufacture specifically for AI processing in data centers, they call it their high performance computing segment, revenue in that segment alone, which accounts for about 60% of the group revenue there was up 52%. And then if you drill down even further, specifically to their most cutting edge chips, which are 7 nanometers and smaller, revenue in that category was up substantially more. And that accounts for about 74% of their revenue. So an amazing outlook for a company that has an amazing competitive advantage. It dominates the market, especially for the highest end chips. It's got about a 65% market share now, approximately. And there's no competitor in sight that threatens its position.
All right. Well, Victor, let's get to your stock pick for today. What are you choosing?
My stock pick will be local. I've never done local stock on your show. So I like the classic SA Inc. stock, Bidvest.
Okay.
I can see that Bidvest, there is a bit of a slowdown. It is being affected by the slow economy in South Africa, but it's got an outstanding management team, not only outstanding management, but its culture, business culture and philosophy. It's decentralized entrepreneurial system, which finds ways out of difficult situations to eke out profits and good returns over time. So at the moment, Bidvest is trading at a reasonably appealing multiple. It's trading about 12 times earnings, whereas historically it traded at a P of about 16 times. Its dividend yield is also attractive. It's about 4%, historically at 3%. And while earnings are at risk somewhat in certain departments, such as their services division, they do mention that they've entered into new contracts at lower margins. But there are other divisions that have some good earnings growth prospects, such as their freight division, where they've just increased their capacity. And they'll continue to make their bolt-on acquisitions. And at this point, they've got about 25% of their earnings coming from offshore. So that provides a nice rand hedge underpin, given that the rand at this moment is particularly strong.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Victor. Really appreciate it. That was Victor Seanie from Benguela Global Fund Managers.